right, everybody, let's get to it. Start for the week here on a Monday. Big shout out to everybody in the chat. A lot to discuss, obviously. Big breakdown over the weekend of crypto, major markets, macro dominating down. So here we go. And this is the big return phase of retesting what happened from June. And I think we got to think about it from more about the June levels, not even the June lows, because the June lows exceeded some important levels. Right now, we're looking at NASDAQ 100 daily chart. Is there a pattern? Yeah, I think that's helping clarify a lot of these scenarios. If the bigger breakdown bear market second leg is going to begin, it fails this pattern. I was saying that on Thursday, and I think it's something to really consider and also break down what's happened in the first 6-8 months, what's going to happen in the next 6-8 months. We're really in that in-between here. I don't think anybody's looking to buy. Nobody's looking to buy. Not right here. Even though we're retesting this oversold level, which is just a 1618 from last year's. All it is this rally up to the all-time high in NASDAQ, then rolled over, did a 1618 extension. Just as like a simple classification, think of it that as your minimum level. This is the overspill level, and we've been in that zone for better part going on 6 months. Okay, and so the whole proposition, I think what everyone's talking about is, okay, fail this and then what? We talked about that on Thursday, and I'm saying, look, there's nothing underneath here. You fail this retest, depending on what pattern you're dealing with, what market you're dealing with, but the macro major equity markets that seem to be controlling the rest of the money flow are trying to threaten these June lows. I again think of them as June levels, where I've said this before, 11,848 is the critical metric down there. 11,848. Right now, 11,885. We've tried to bounce. No confirmation here. This is the other aspect that we have to demand. I mean, at this point, with all of this garbage action that we've seen over, especially the last 90 days, 100 days, no confirmation, no opportunity. That's the way I'm going to start treating it, because we had this check back from a week ago. Depending on the market, a lot of those checkbacks failed. And the only thing, especially with NASDAQ and all the lower levels, is that your daily chart here then turns into some kind of, what, bat pattern? Let me remove all the lines. Just, again, retrace this. Delete that. So what do we have here possibly taking shape? Since we've taken out the B point off the June low, is going back to some kind of 886 retracement. This is just immediate daily time frame, 1140, sorry, 11400, 401. But we know that the big level, the macro level for that whole scenario going back to last year is 11,848. You know, you've stabilized there 2 days. Look at there's the 5-minute chart at 11,848. Okay, let me adjust this. Yeah, 11,848 is like that bottom end is like there. So you're stabilizing between that and the low. But that has to be on that retest, you know, structurally would have to be it. And so all your problems begin under 11,848. Would have to be a low, closing below 11,848, and then just starting to take down 11,000. Just think about that way, because once you break down 11,000 or take out June lows, if this is going to be your big bear scenario, Again, a follow-up from Thursday that there's going to be plenty of time. If that's the way this is going to go, we're done the dance from June 21. Notice how on Wednesday, it's going to be September 21st. I'll talk about that in a minute when it comes to good old crypto. But just understand what's at risk here. Okay, this is actually, I think we talked about why this whole scenario could be like a 5-0 pattern. And then what happens on this 5-0 pattern? Looks like that. Just tracing out dots here. And this was a 50% level off the high. Okay, you're just looking for the next leg down off of that pivot point. If failing the June low is an immediate objective of 94, 60. Again, this would have to fall apart probably before the end of the month, maybe start this week, under 11.4. 11.848, that's our minimum retest level. Again, we're showing that on the daily chart. With the larger ultimate retest, which is something we talked about, look at the market report from July, gold members. Some of the market report stuff that we talked about was this rally from June up to the downtrend line, and now look what we have. So I'm pretty much giving away all of that analysis in a 30-second rundown, but that's pretty much unfolding into that type of scenario where that was a check back. We come to retest, and on the retest, you have to fail. You fail, and then again across the board, you're failing these B points. Where the 886 at 7,800, you're already 11,000. That seems like a far way away. It's the only other possibility under these lows. So treat it like this. I mean, we've had a few opportunities, other return trades that have come back down, like some of the bullish ones, like we talked about in Microsoft, haven't hit yet. Is there a bullish opportunity on the NASDAQ 100? No. Not really. I mean, unless it was to trigger something here in the next several sessions and even stabilize. And this is the thing there. Let me remove all those lines. Again, why NASDAQ 100? Because that's dominating the central focus of, are people going to put money to work in risk assets? Is risk going to go back on? Is it going to go back onto the tech sector? That's what's definitely hampering crypto. But now you're on a secondary retest of the June levels. I won't, again, not lows, but the levels where you're already at the low end of that maximum level, 11,848. So we'll know, come back tomorrow on NASDAQ alone. Any close below Friday, forget it. Like, let's say we close, you're down 80, 75 currently on NASDAQ. Nothing's saying there's anything here. And even if there was something here, let's say we were staring at the absolute low for NASDAQ, there's probably 2 or 3 things that would have to happen before I would even consider that from a long opportunity. Just wanted to highlight again some of the weakness that we've seen. Here's standard RSI. It's something where on the eSignal platform for NASDAQ 100, I think, because you can get RSI on any platform. And again, if you're even just learning, you're new, and you're integrating RSI, which you should be, you need to see definitive confirmations, which are not there. And the fact that we came up to this 50 level, and look, we're all the way back down here in the trending to try to get oversold, but we're not there yet. That's a weak position to be in, especially getting rejected by the 50 level about 10 days ago. So NASDAQ, just consider this a continued grind, even with what the daily's flashing. Forget the weekly. which doesn't put this in a very good context, but you've come down on the daily so far. We're 11.4 at the 886. You're going to go retest June levels, June lows. That's all that's there. But the other aspect, think about what happened a week ago. The big down candle has seen a lot of follow through. That and treat this as a B point, folks. You're going to see this in a lot of formations that is not. It really does mean that there's a larger W formation that has to take shape, depending on the market and the relative time frame as well. A lot of these did just trigger. Let me take a look at this. I mean, I'll show it in Ethereum in a second, but the thing that happened on FedEx, it's showing a crab pattern right now. My larger concern with FedEx is this kind of thing. Let's go to the weekly, it shows it even better. Here, another situation where you've rolled over. There's the COVID low at 89 or 90 bucks, and clearly that COVID cycle ended a year later. Folks, you know the rules. You know how we look at this stuff. If this is a 50 point right here, that's a 50 midpoint retracement, then how the ABCD lines up, if we treat that as a big bat pattern, which it is, all of this will trend lower, take a lot more time to get down to your ultimate target. I wouldn't even consider it till you get down to these 886s. And that's the thing that seems to be emerging. Some of them have progressed further along to do their COVID 886s. Some are already down there. Others are doing stuff like this. I mean, FedEx major fail. Flashing a crab pattern doesn't mean anything yet. Yeah, you can see a little reaction, but any confirmation down there? Nope. Not an opportunity. And your weekly is still oversold. RSI just got oversold, but that has to come out of the zone. Look to FedEx. If this starts happening to a few other big name stocks, then I would be a little concerned. We get into earnings season in the next several weeks, and you see pre-announcements or things like that fall apart. They're going to start doing that BAM movement, that bat action magnet move. You go from violating your 50 point, which that did, and now you just shoot the gap. Ultimately, your 162, 116.62 is really ultimately where that whole, think of it as a cycle, where that's grinding down to. Final one on all of these that you have to take a hard look at. Things like the diamonds here. Software is already flashing a larger bat pattern at the 886 at under, what's that, at 273. But no, the daily, this is the daily scenario we've talked about for a long time. Coming back to retest the June levels. Around what, 302 is the 1618. That's another common metric, common way to look at a lot of these markets that have rolled over. They did some kind of setup. It's either a 1618 of this year's action or a 1618 of last year's action, the run up into the end of the year or January. 1 second, let me remove these, just isolate this one. So take a look at the diamonds too, because if the market's really going to get hit, do what a lot of people are planning on it doing, then we're going to see this come down and fail this zone. It would have to happen. 307.58 currently, but the big test is at 302.79, essentially 5 points lower. You almost got there today. Really nothing there yet that would even speak of even any kind of confirmation. Do check this out though. Look, amplified RSI is almost back in the oversold zone. HSI is at the 50 level, I would expect that to turn back down. If we have to come to a minimum of 302, maybe as low as 290, possibility to complete this return wave down, I would also want to see definitive confirmation. That's many bars. Think of it, 10, 15 bars away before that whole thing could complete. Puts you towards the end of the month, early October, of course. And I still say, like NASDAQ chart, if you're going to have the larger bear market, which is a secondary leg, there's a ways down. There's really nothing there. Take a look at this relative to its COVID low. Okay. You're not even at the 50% level. You're at the 382 up here. But this would still take out the prior low. And you would, from that breakdown, you would have to expect, all right, if it's some kind of major drop, your limit is the 886. And that's really what everyone is saying. That's from a measured perspective. People are saying bear market, recession, what have you. What does that mean from the way that we look at the harmonic pattern framework? It means that June fails, a second leg takes shape over the next 3 to 6 months, and within 10 days, 2 weeks. If it's a retest of the June lows and it holds, it's probably many sessions of some kind of reversal. I mean, look at your daily. Again, coming back to retest that pattern. Beautiful crab pattern, right? Deep crab pattern on the diamonds. What do we look for down there? If that's a long opportunity, I'm not saying it is. I'm just saying we're using first that as a framework of analyzing where can this go in this, so far, this return, in the current return that started 3 weeks ago, to go from initial reaction, end of the reaction, back down. And down to 302.79, 5 lower. Has this return phase ended just because we have 2 days? We had an up day on Friday. Today we're trying to respond. No, it's not. Still lower, still within this immediate downtrend. And again, until we get down to 302, that's the plan. 302, and then show me some kind of confirmation down here. You put that together with the NASDAQ 100, then you'll be able to gauge how far this thing's going to go. Under, say, 288, that's where larger possibilities can unfold. I can't commit to the larger possibilities just yet until we see how this responds after hitting these minimum numbers, the return numbers. Again, reaction. I mean, this first test was ideal. Confirmation, bang, right there, right off the 1618 up to target 2. Really it ended. There's the HSI on the first move. So we're looking for, consistently we've seen in this setup, HSI has been a great indicator of marking where to be expecting that next opportunity. Okay, we're nowhere there yet. Nowhere there yet. So predominant trend still going to eventually collide with this 1618 at 302.80. It's like that. Probably this week into next week at some point. Okay, so let's jump over to Ethereum and talk about return phases and failed support, failed stops, bam action. So we talked about bumping stops, 1480, 1430 to 1480, 1500. So what's it done since? Sailed right through. Traded as low as 1278 after breaking 1500. Okay, this is doing an immediate BAM also. So, and again, for everything we talked about, a possibility of reaction return, didn't materialize, didn't give you the full retest, and then broke the trend line. Trend line's the last phase, and again, that's why I was saying bump the stops. So it's been a really tough ride since the check back, since this signal that we saw in Ethereum right there to set up possibility of a full return, it's failed. And that's why 1500, 1480, it really just sliced through that, fell apart, broke down. So if I'm looking for another opportunity, where would I be looking for an opportunity on Ethereum? I'm not. I just want to see this come down and complete what is now clearly a bad pattern. There's your B point at a 52, come up. C point was a 618. So go to the 886 now. All right, and that just started yesterday, after the breakdown yesterday and the weekly close, really ugly yesterday over the weekend, failed miserably. I'm not even going to say the word take more time, but I'm done probably with this for a while, because I think this is going to then take the better part. Just based on the breakdown, I think it's going to take the better part of till the end of the year for a lot of this stuff to essentially probably tax loss sell out. You're not going to do anything at these levels, even come back and retest the 1260 level on Ethereum. I mean, there's really just not much there that's going to trigger off of any of this this pattern. You had a dud reaction that went sideways for 4 months. You know, here's the crab pattern. This is the crab pattern we've been talking about for a long time, probably since just targeting another 1618 like we've done with a lot of these markets. A lot of these markets did a run from September, October into November or January, and then where they are now is at a 1618 off of that move. That's exactly where Ethereum's been sitting. That's 1278, essentially 1250, 1300, something like that. I just again, with that kind of a situation, and then you have the back-to-back patterns. You had the bearish pattern, didn't even come back for a full type 2. Another, I'm saying, really tricky within this larger zone. I'm just going to wait. I'm going to be very patient. I'm not going to look for anything until you can give me another pattern within this larger zone, or get to the right of the downtrend. I think that's probably more than anything. We see consolidation. We see a lot of chop in underneath this downtrend. So until we're to the right of that downtrend from here on out, I'm going to wait. I'm going to wait for it, within this immediate retest, the fact that we have broken the B point. It's a BAM level. It sets up for the 886 eventual move on 886 down to that 886 is like 1020. And I don't, I know I have talked about, back in July, I talked about the larger possibility of that 886 being tested at 680. I'm not going to entertain that. Just right now, let's keep it in chunks. And clearly that's where we're at. We spent how many weeks there, folks? It tried. It showed us a couple different times and then rolled over. And I don't, because it's already exhausted that time, I don't need a heck of a lot of price to wait on that any further to see if this larger retest or whatever is going to work out. It's not. Maybe down the road, but after another full retest of June levels, not June lows, June levels. That's 1260, 1267. and time, weeks. I'm thinking till the end of the month. Go to the monthly chart on a lot of these. If it's Bitcoin, if it's Ethereum, let me remove this so we can see just the simple price action. Okay. We're going to come back. We're going to check back here. What's that monthly? Let me see. I know there's been some issue with a couple of these data feeds recently. I don't know why that data feed for HSI is only running back to March of 21. Should be a little bit more. I mean, there is, according to that, there's a monthly. Yeah, okay. The Bitrex monthly has most of the Ethereum. It's not bad. Let me look at some of this other stuff. If I'm looking for a signal, if I'm looking for something here on for Ethereum to like, okay, give me a point where what would be the next thing to be looking at? All we have is this HSI signal going back to essentially the late June, early July lows as a retest. Clearly, we're not going to do anything off of here now. And the sell the news on the merge is exactly what happened. They sold that as soon as they came out. So kind of in a strange position, though, where we have on Ethereum a lot of overbought ratings on the weekly chart, where on Sunday's action and the close last week kind of sealed the deal. It was a 3-bar reversal. Look. So I do want to watch for that immediate breakdown. I mean, again, we closed underneath these lows. And that easily a 3-bar breakdown range. The way to look for that, folks, is ride HSI back down to the next oversold signal. And until that happens, again, you just shoot this gap. There's just nothing there. The failure there, epic. This failure, it's almost a middle finger to the whole market. Whatever that 886 is, you can see it on a weekly too. Connect dots. There's the low X. Maybe this has to be 30 bars. A, B, C, down to the 886. It's 1,000 retest. It's 1,000 retests. We had a couple good things that said, all right, maybe there, but no. Again, I really am surprised to see this get just abused to the level that it is, but that's what's happening. Bitcoin, folks, still holding that 20,000, trying to. Here's the daily chart. Notice today where we opened up. I'm going to go to the Bitcoin futures chart in a second, but another big pattern, no doubt, big pattern in Bitcoin. Even the software is trying to trace out a shark pattern somewhere in this 18,000, low 18,000 area. Again, under 18,000, I just don't think there's really much to be offering other than a lower test. If not, is this where the breakdown occurs for the 886 move to 11K? That's how serious this zone is. I mean, it's not just not structurally in a constructive spot to be retesting this zone without hitting lower levels. It's like this if this shark doesn't hold, or let's say this doesn't even take shape, again, you're looking at this as a B point, probably close to an 886. something like that within the larger zone. How many times have we seen some smaller patterns within these larger zones that take more time? And this stuff's starting to all point in the same direction, which is lower, retest it, let it do its thing, and get down to 17 or get under 18 here, and then 17, and then you're just like a drip away. I mean, like what's a $5,000 candle to hit 11K once you're at 16? Do that in a 2, 3, 1 week event. It's coming together like that, where the breakdown occurs, it triggers, you're going to see it, and we just have to then say, okay, all these 886s, again, this full reset 886 thing is, step aside, let it happen, let it come down. It is definitely a drag, a crypto malaise, if you will, but there's your 886, 12K off the COVID low, and an all-time is a little bit higher. Total crypto market cap. Here's the big development off that total crypto market cap that we have looked at over and over again, is the ones without Ethereum and Bitcoin. Here's the total 3. Beautiful pattern. Here we go again. Beautiful pattern. And maybe I would come back to this at another point, maybe a little bit later, if I had some triggers that were to the right of that downtrend. But I think this inability to get out of this zone means come on back, like retest, treat this whole range, treat the June levels, June lows, August peak as your current range within the larger pattern. Not even, look, the possibility of this even to come down to a hop level is on the table now. Hop level at 285 on the total 3 is, yeah, that's now on the table, because you're not doing it here. And just like I said on Bitcoin, Ethereum, you have BAM. You have set up the BAM trigger for your immediate time frame. Here's daily. Total 3 did have the pattern that we looked at, gave us a reaction, gave us HSI, but is failing to do the return. Let me clean this up. Remember, this is the reaction. I was thinking, all right, let it come down, trigger HSI, and then come back and look for the return. Not happening. Okay. Missed that one. This is not taking shape. Not now. It might, maybe do one of these looping, come all the way back down and then retest it later. But right now, taking out target 2, inability to even, there's the trend line. I mean, here's the trend line off the pattern. So we'll ride that down too, because where we are within this breakdown is that you're 2-3 days away from making a run to these lower levels. That's total 3. Here's with Bitcoin and Ethereum, and same deal. You had a small pattern there. Now you're taking out this B point. This is more like a Gartley structure, but you're still, not really, not pretty. Yeah, it's way beyond a 618, but it would be something like that. And it's doesn't even really work. You don't have an ABCD structure there. 805, nope. I'll tell you what does work. If I'm connecting dots here, when I'm thinking this is an M formation, that's at a 685, well, then that's probably, and there's no ABCD here. This is actually a good one, because, and we'll see how, I hate to say it, but this is how it's lining up. You do have an X, A, B, C, D, but your B point is below a 618, which is really the maximum for a retracement. if you wanted a retracement pattern, like let's say we're looking for this formation to come back, retest the low with a Gartley or a bat, and then take off, you would still need an ABCD. The way this first thrust came down, okay, didn't make a concrete low, intermediate low until, yeah, really the 70% level, 68% level. So if this is going to take some kind of M formation, there's only one possibility, and that's a crab deeper into the zone. So I'm not saying that's going to happen, but if we are going to break down here at this B point, and you're going to take out that X point, well then that's, again, line it up. Then the end of whatever that has to be is just a 1618 inside the larger zone, inside the larger pattern. You're going to, what, make a run down to this the hop level at this deep crab like that. That's at 455. That's a 50% haircut. That's why these points are so critical where they are for crypto right now. And again, these smaller patterns that triggered, and the total crypto market cap, that's an ABCD pattern inside the larger zone. Yeah, again, I until it can take out that, you're just use the whole zone, use the whole crab zone, and this will stay down until that breaks out. So you're, unfortunately, this kind of resets the clock several weeks away until you can even get out of the daily downtrend. Couple interesting ones, okay, keep your eye on. Cardano, looking for bad signs, signs that would say, okay, this thing is kind of spreading, and you're almost there on Cardano, taking out the lows under 40 cents. A close 39 anything, 30 whatever for Cardano, just to get perspective. Okay, you're under the downtrend line, you then just shoot the gap under 39, under 40, anything under 40. You're at 45, 44. You only threatened it a couple times. A Binance coin, BNB, 257, right? 257. Finally hit. There you go. So 257 was the 382 off the pattern, and check it out. Okay, this is the last 2-3 days, 5-minute chart. Yeah, there it was. Hit this morning and bounced, what, $15? That was this smaller pattern. Here we go again. I think this is really a great lesson for looking at the targets, using the targets, okay, as even as like a mandatory structural analytical tool. You know, I hate to see these not get hit. And just last week we were talking about BNB not hitting 256.60. Well, today we hit that. What was it? 256.60. Today's low was on Binance US. It was 256.73. Are you kidding me? Let me check the other one. Yeah, on this one, on FTX, 256.60, and target one was 256.66. What's the other feed? You get the point. There's regular Binance. Yeah, I mean that it hit exactly 256.70. Target one, 256.70. Look at the 5-minute action on that. That's the Binance main feed too. So Pretty remarkable. What does that mean, though, is this daily reaction that started way back here at the hop level is over, technically. And this has to be the low. That 256.70, I mean, period. You would look at that as an immediate type 1 reaction. I can't believe that hit exactly, though, on the other feeds, but that's exactly there. You're there. I'd want to see HSI trigger as the next step, but 256.70 is where we start to look for the return. Are we going to get a return phase? Are we going to get HSI to come down, trigger, and then go? Just the starting process, but that hit the big number we talked about for about 2 weeks. I want to see what goes on by tomorrow. Needs to do this. Really by the next 3 days, come in, go out. One more. Let me bring up, here's this Ethereum Classic. Where's the weekly chart? It was a daily. We had a butterfly up here. A couple of, where was it? ABCD, a couple of long-term patterns on Ethereum Classic. I don't want to spend all day going through all the different feeds, but what this ended up being, or looks like it's going to do, is treat that as a target 1, as a type 1 off the ABCD, and your hop level, if you're looking for targets on how low this can go, your hop level is like 2650 on Ethereum Classic. So just shoot it like this as a minimum structural level. Come back down until that triggers, and that would have to also trigger an HSI. Another reason why this is potentially another BAM. HSI on Ethereum Classic is headed lower, but a couple more days until it could register. So what is it? Connect the dots. Another bat pattern. There's X to A. B points at a 50, almost 48. And then shoot the gap. So if you're breaking down your B point, your BAM, 886 is around 16, 17 bucks, like that. Whole lot of different makeup with crypto, but most of it still triggering some kind of retest lower. Ethereum's probably the worst of all. There you go. Let's just wrap up on this. If I was just looking at the big pattern, I'd say, yeah, your first reaction's over, and 1280 just based off that crab patterns, the 1618. I'm not even going to think about it until you go back down to 1280. 1280 on Ethereum, and that's a minimum bigger level, but the 886, like I said, that's what just got triggered in the last 2-3 sessions. Look at last week, okay? Look at Monday, look at Tuesday. Why 1500 was so important was because exactly this. You fail it, you flush it, and it's just the start of the flush. That's the flush. If you want to flush it to 1040. Dave asks, worst case scenario, how long will you think it would take to get a good, strong bull run? Listen, I've been really looking for, it's a good question, Dave, but everything we've been talking about is some kind of reaction. Can we get some kind of reaction off those June lows? Not to mention, okay, here we are on Wednesday, it'll be the 21st, another equinox, blah, 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 but usually we make the low on around the 21st and establish it a month later. Okay, so with this kind of rollover and inability to even retest some of the patterns we've seen, like we all got a lot of these the big ones, Ethereum, Binance Coin, the major total crypto indices had the reactions off of the bat patterns that formed in mid-August, end of August, depending on your market. They did a reaction. They never gave a full return. I would have been really satisfied with the whole move had we gotten one full return. Again, I was looking for target one on a completion of even that would have been the slam dunk opportunity in terms of a larger type 2 retest, would have been up there. But no, for me, at really what happened just a couple days ago, the failure under 1480. For now, you have to just say it's going to run into the end of the year, in my opinion, and not have sufficient strength to break the bear market downtrend, depending on what market you're in. Some have, but some will need to make a more complex signal to the right of this downtrend, depending on what market you're in. Ethereum, a couple of the other total indices are still underneath that downtrend. And what this is saying, just the last 72 hours, what's that saying is that, hey, we're in no time to bust out of that downtrend. We're in no rush. If anything, what we probably want to do is give a pattern, give another bullish pattern, back to back to back, something like that. Okay, fine. That's what this seems to want to, where it wants to go. It wants to break the B point. It doesn't want to do anything off of a real nice trigger at 1550 area and all of whatever that merge thing was. It's this type of reaction says it's probably even more hype than what people think. Whatever that news was, doesn't even have to be anything. It's a news element. Whatever that news element, think of it that way. Wasn't too impressive, was it? And other ones that are to the right of their downtrend, they probably need to give you another signal. They probably need to. I know Cardano is one of them that just started to poke. All right, trying to poke around here. But maybe what it has to do, and that's a good candidate for crypto. For any technical, any chart you're looking at, it's not a bad starting point, but with the lack of any reaction, get out of that downtrend and start to break free of that downtrend. It really doesn't want to do much. It's going to need something, a pattern catalyst, something even on a larger time frame that develops to the right of this downtrend. And look at the last, this is a weekly chart, no, it's daily chart. But go back the last 30 days. Think of it this way. We're always looking at that initial breakout period, or any period I'm looking at for analyzing price action. I do want to look at a 30-bar segment. Okay, looked like I was going to try to do something to the right of that breakout level. But the fact within 30 bars, no real follow through, no real explosion. And now think of it where we are, 60. Yeah, 70 bars later, we're back retesting the lows. Don't expect any kind of explosion from there until I see a pattern or see a major development of a divergence, relative strength. So could grind between 40 and 50 for another month or two, and then crack it. And again, Cardano is the one to watch, because under 40 is where then there's just nothing. There's air. We're back to that. We are definitely back to that assessment on support levels that have nothing underneath them. Real quick, folks, let's look at the 2-year, 10-year, because as I said, a couple of charts that I know people don't look at too frequently that you need to now. You know, the once every 10-year market that pops up and basically wants to wreak havoc. There you are. The 2 years almost at 4%. Without getting into too much repeating myself, the long-term targets on this are 4.8. 4.8, and that's a few different combinations of moves. It's a shark pattern, but it's simply stated just a 1618 extension of this breakout move that started back in, I guess it was August, really? Yeah, August. It really did pop through. Maybe it was July. Go up to the 886. That's 465. And it's not stopping. We did not, we had an incredibly strong week last week. And just following through here. The 4-hour chart's probably better. There you go. There you go. Yep. Don't even need to keep going up. You just stay up there. But once you break above 4%, people are going to get concerned. And then the 10-year, what we're looking for on the 10-year is the difference between the 10-year, 2-year. All right, so 2 years, 395. 2 years, 347. Only widening. That's amazing. All right, almost 50 basis points difference. Keep an eye on both of them. This one has a couple of interesting levels. The blue line is trying to trace out a shark. It's trying to break above the June peak. Once that does, I think the rest of it will go. Obviously, the 2 years, because the short end's getting raised by the Fed, the 10-year hasn't caught up yet. That could stay inverted for a while, but watch what happens here. I'll cover this tomorrow and Thursday, because if that breaks out, which I think it will eventually, I mean, it's, if not today, by Friday, and has a follow through, that's going to spell trouble. It's going to spell trouble for this whole interest rate thing I've been mentioning for the last several weeks, of where it really accelerates. I mean, it's been going up, and everyone knows that. But what I'm talking about is a real acceleration where we just go pop and go 4, 4.5 on the 10, close to 5 on the 2-year. Yeah, 3.5. Things we don't always look at, folks. We don't always look at stuff like that, but you have to look at it. In the same way a year ago we were looking at gold and silver and things like that. Now we look at interest rates. And we were looking at volatility index as well, which still hasn't done much. I'll start peeking in on that a little bit, but VIX is 26. No real follow through from last week. And take a look at the patterns. So let me take a second and just say, everybody, we're working with Harmonic Pattern Collection for TradingView, and it's open as a free trial for everyone. You can access that at harmonictrader.com. I'll go to that in a minute. But one of the things that the patterns do, and I don't think people apply this enough on all types of analysis, go to option markets, option data feed, go to volatility indices, other kind of metrics, and you're going to see the same patterns. Volatility ETFs, they do seem to have a lot of harmonic qualities, more so than I think other markets. This is the VIX index, and we're seeing a really nice back-to-back Gartley to bat. There's actually a few of these here. There's several patterns here where I'll look at this immediate completion point in the VIX. It's setting up where even if we get a little bit of a pullback off this pattern, the larger breakout, the larger possibility of where this ultimate, if we're going to get some kind of movement we'll see a spike in the VIX, it's probably going to retest this hop level all the way up there at 40. Despite the entire correction all year long, we have not been above 40. We've got a daily shark pattern, a couple of other smaller patterns, all doing type 1, type 2 movements. And if we get a retest of that shark after probably some consolidation here, look for it at 40.79 as the hop level. Thought that was pretty interesting. But even the last couple of months, take a look. Just completed a bearish bat at around 20, what was that, 27.93. And we're backing off that today. We have not hit target 1 yet. So looks like VIX wants to roll over after a few days of not getting above 26.93 and maybe come back down to either target 1 or retest this Gartley where, and that's down at 22.23. That would be where maybe the larger retest of the pattern where VIX could really do a larger move is off the retest of the Gartley. That could be good for equity markets from here, but I'm going to start covering that a little bit more. The real problem is the interest rate scenario of these rates continuing to spike. So even if VIX is kind of somewhat mild at 25 or mid-20s, rates continuing to go up day over day is really going to put pressure. One or two more. I want to show one or two more. Raiden, appreciate that question. You're asking about Pi Phi Band. Let's bring that tomorrow. I'll look at Pi Phi Band tomorrow because we've got that deals with, that's like volatility bands, but we utilize 618, 1618. But I'll apply that to some things tomorrow that I'll look at because I want to look at energy really quick and kind of finish up with that. Here's the deal with crude oil rolling over again, and probably even more so than anything else is this UNG chart. So hasn't been an easy read, but we have identified this type 2 crab pattern on the daily that has rolled over again right at the hop level at 33, and go with it. Almost, I was fearing maybe this is going to break out and bust above that hop level. There was the confirmation was a little while ago back here around 30 and change, but now that we've rolled over, target at least go down to target 1, but because that's a retest area, that's a target 2 level. Look for that to go down to as low as our, target 2 on this move, and I think crude oil is doing the same. They tried to throw down crude oil last week, responding a little bit today, but hold on 1 second. 1 second, everybody. All right, sorry about that. Here's the thing on crude oil that, again, another pivotal retest, make or break under 84.57. You tried to dip down there earlier today. Any close under the last week's lows. You're trying to check back here. What's that? That's right at 83 bucks. Any close, anything under what, 80 bucks, $81, this is done. Okay, and it doesn't look like this thing is really challenged or responded off the shark zone. I mean, it looks like that. Okay, until you can break out of that, just stay on the sides with the stocks. I mean, we talked about ExxonMobil. Look, ExxonMobil retested a big pattern up here around 100 bucks. Did it get the check back on that daily? Hold on. Let me come back to this 1 second. There it is. I didn't have the bearish patterns on. So, and we had a 2 of 2 on ExxonMobil. Here you go. 193. That was last week. And then the check back came in a little bit lower. So again, if we roll over here, ExxonMobil trying to respond today, but already took out the lows from last week. Looks like energy wants to go lower. It's a pretty tough ceiling right there. And that's not typically where we see, here's the reaction, but the reversal, we usually want to see it above the level. This one was below. Probably, one that I did not catch this, but I'm watching it for a larger move down. If that's what energy is going to do, if it's going to give it up, we're going to see it probably before the end of the month, another week. This week, if it's down a couple more days, it's done. And same with UNG. UNG and Boyle, and like the rest, they're going to come back down. Again, this UNG thing, really early in the move, but it's 2 of 2. Where's the nat gas chart, futures chart? Here you go. Yeah. Remember, 6 is support, 9 is resistance. Then again, here we go back down. I think I'll just keep saying that. $6 is support, $9 is going to remain resistance. Hey, if we can come back down to $6, that could be another short-term swing opportunity for nat gas. You're 775, 76 right now. Why not? Why not come back down to maybe 562? You could still do that and still be long-term bullish. But right now, you hit that resistance one too many times. $6 support, $9 resistance. Continue to use that for nat gas. The rest of it, folks, again, I'm just thinking it's depending on where it is within the framework, type 1, type 2. I want to stick to that. Here's something, kind of an individual play that I really love this stock, I think, and I own this stock. It just did a type 1 reaction off the shark. It looks like it's strong, but this one got rejected. No confirmation, but got rejected at target 1. And I would still be waiting. This is Mosaic, MOS. Still be waiting for the retest for the type 2. That's 45. You're trading 55 currently. Looks like this thing had a couple of false starts. Many of these are on their way back to retest, and that's the opportunity. I don't think that halfway down here is the opportunity. Nice reaction, June lows, June levels, nice charts, nice patterns, reaction done. Come on back down, do the return phase. And again, I'm going to, tomorrow I'll look at more of this platform. But Microsoft is probably the #1 chart in terms of tech, where here we are. 241.60, folks. That's what I was saying last week. And I think we got there today. 241.60. Officially hit the type 2 retest. Completed the type 2 return. There we go on the 5-minute chart. Take a look at Monday, Tuesday, or even Thursday's breakdown of Microsoft. So now you're there. And again, this is why the retest of what happens here, I'm not really so concerned about, like, okay, yeah, the flush down here has been pretty nasty, but if by tomorrow or the next 2 or 3 days you see this thing just washing out, it's going to be a big problem. Now we're in that zone of where Microsoft hit the minimum 1618 level. That was it. But this is the wider zone that we're looking for some kind of confirmation to take shape. What do we have? Well, you're oversold. Amplified and standard RSI are both there, but they're not out of the deep levels. Amplified RSI is, I should change the color there, but look, I'll highlight it. There it is. Deeply oversold. HSI, same deal. But whatever's going to go down into this lower zone, it's this week. Because these are in the zone now, and if they're going to expand in the zone, then these are going to flush into the levels. Microsoft, we could get another real bad day, down day to 221. And under 221, much like the rest of them, there's nothing but air. I mean, you're looking at a much steeper decline, but to drop into this zone is happening this week. It's definitely, you're hitting those levels that we talked about now, minimum structural levels. A whole lot of things have to happen until then. We could spill into here deeper this week. I think by Thursday you'll know. Thursday with this whole pattern you'll know. A lot going on, folks. It absolutely is a pivotal point. I wouldn't trust any rally on NASDAQ or S&P for that matter. And you still have a little ways to go down to retest something like the SPY. The SPY has its big levels down here at at a beautiful, there's that bearish pattern, but where's the, hold on, just down here at the weekly, or no, 4 hour, sorry. Another B point on the SPY on the 4 hour or the daily, where you have to retest the 886. Like that. There you go. 370. You're very close to a lot of levels, folks, but until you hit these, you're going to have to let this thing continue to fall. 1 or 2 updates on, I mentioned some shorts. Here's the Uber situation. I mentioned this on Thursday. I didn't send it out as an official opportunity. I probably will tonight because we do have, you're retesting some major short-term resistance around this 33, 34 level. You did trigger HSI, around 32, 33. What you're looking for with all of these is that a much larger drop down to your target ones. That's it. Not, you're up here kind of hanging up there. You did do a crazy 3-bar reversal last week, but you're not, you need to follow through. But this is it's a really sweet spot for just reaction, even in a bearish trend, just looking for a bearish reaction. And then target was the other one. And target did fall down. Did that drop? Where's the daily here? Yeah, this is another shark. I think there's a shark on the TradingView platform. Here it is. I think it's still early. Yeah, there you go. Yep. So even after as much as it fell, I'm still looking at this target. up here around what, 170? 170. Yeah, it traded in 162, but we talked about this last week. This was a new confirmation in the first zone, and it's a type 1 down to 150. Tough to see that and treat that as like a bearish opportunity. Why hit that when it's already moved so far? Well, just look at this against the pattern. That's your objective. Beyond that, yeah, the longer term will take time, but another short opportunity in downtrend. We talked about that on Thursday. I'll look at some more energy on tomorrow, folks. It's just, we're back into that time. Okay, remember April? Remember early June? Yeah, we're getting back into that kind of stuff. So we'll talk about it more on Tuesday. And Thursday we'll be back. We'll give away some books. And beyond that, I might have to start. I'll tell you guys about Thursday tomorrow. I might have to start early. Until then, everyone, go get them. Hang in there. We will prevail no matter what. Let's see what happens though. By Thursday, I think it's this is going to tell us. They're going to tell us what they want to do. Catch you on tomorrow, 12 noon. Take care.